Board, we do have Mr. Abhishek Basumallick, the founder and the chief equity advisor of IntelSense Capital, joining in to help us understand more about the markets and the way forward from here. Warm welcome to you, Abhishek, and thank you so much for taking the time out. Well, how have you really assessed the roller coaster ride that has been underway? And, of course, we were heaving a sigh of relief right in the morning when some part of a recovery was taking place. But again, we are down in the red. So is the pain still left to be faced?
First of all, good afternoon to you and all your viewers. I think, after yesterday's very sharp and very big fall, the very fact that we are today, we opened up, we are holding on to more or less, opening levels, plus minus very minor points here and there. That itself is quite encouraging. That we did not have a follow-on day of with large cuts, right? So that itself is quite encouraging from a very short-term perspective. So that's something to take away from today's trade. At least, I mean, there's still about an hour to go, but from morning till now, I think the most encouraging part is to see that we've seen some amount of recovery from yesterday.
That's very sensibly put, Abhishek. And let's hope that 24,000 is saved for at least today. Tomorrow, of course, is the weekly expiry of the Bank Nifty, which is actually getting weaker and weaker. Look at it from this point of view that it slipped below the 50,000 mark, and that's a pain point. There was a 100 DMS support which is now providing some strength to it, but from a high of 53,350, which was on 4th of July, you are somewhere below 50,000. So that's easily a 3,700 point cut that we are seeing on the index. As far as the Nifty is concerned, about 1,100 points have been shaved off in the last two and a half sessions, but major support levels are seen. Let us see how the index navigates itself from now on, but the battle is at 49,700 for the Bank Nifty, and of course 24,100, 24,000 on the Nifty. Anything, Abhishek, you think looks good at current levels, or would you just stay away and wait for this market to settle down? Is it still a falling knife?
It's very difficult to take a call on the day or just maybe one day after such a large cut. But I am personally, I've been very bullish about India with a medium to long-term perspective. And I think today I would be, being bullish today is being a contrarian. I see everyone around me very skeptical. Everyone is concerned about valuations, about stocks having run up, about everything that people can think of. But when I look at, say, the corporate numbers, I don't see a lot of gloom and doom. I see companies delivering maybe not blockbuster numbers, but decent numbers. If we were talking about the banks, right? If you look at some of the banking numbers, pretty decent numbers from a large number of banks. And if you look at the valuation of banks, again, there are quite a number of banks which are reasonably valued. And that is, if you go sector by sector, that is the case with most of the sectors. What we are seeing, what I like about this entire bull phase that we are going through, is there's been consistent sector rotation, right? And when that happens, typically you don't see a lot of froth building into one sector or in the overall market. So that is one thing which I think is very positive, that we are having continuous sector rotation. Stocks which are running up are then taking a breather for a month, 2 months, 6 months, and then something else comes into the fancy. So that way I think structurally the market is much better than before. In terms of sectors, I think there are quite a number of sectors which look interesting to me. I think chemicals are looking very interesting. Pharma is looking interesting. I mean, they've been looking interesting for a while. Insurance is looking interesting. So yeah, I mean, there are pockets where there's definitely good stocks to buy.
So, Mr. Basumallick, help us understand this. Is there any space which you would avoid right now?
Yeah, I would try and avoid stocks or spaces which have run up very sharply in the very recent past. So, case in point, maybe defense. So I would sort of be a little bit skeptical, wait it out and see, because what happens is defense is a very lumpy sector. Numbers come in, it's not a very linearly growing sector. So quarter on quarter, things may not work out the same way. So you have to give it some time. You have to give it. You don't want to get into that sector when things have run up a lot. So I think defense is one area which I would, slightly be avoiding. Even I think the solar, the wind, you have to be careful, and you have to pick your spots. A lot of fancy in those areas, lot of valuations which look pretty stretched. So you have to, take a case by case bet. You're better off looking at other sectors which have not done well. Case in point, insurance, FMCG, with rural. Yesterday, I think Britannia commentary was quite bullish in terms of rural demand picking up. So those are areas where you will find a lot of interesting bets to look at, where the stocks have not done a lot, and so there's not too much of froth built in.
What do you think about this narrative being discussed, Abhishek, that one should start to raise some of the cash levels? Is there merit in that argument?
Cash level discussion is only sensible if you discuss it along with your time horizon. So if you're a short-term trader, and volatility impacts you a lot, you might want to have cash. If you have a 2-year, 3-year, 5-year, 10-year horizon, you might as well remain invested, because you'll find it very difficult to time your entry, exit, re-entry correctly all the time, right? So you have to, exit and enter, re-enter back. Otherwise, what will happen is, today, let's say at 24,000 Nifty, you decide it is frothy and you get out, and then, markets don't correct, or don't correct as much as you thought it would, and it goes up. When do you re-enter back? So a lot of problems in timing that correctly both the time. So if you have a longer time horizon, you might as well sort of stay invested. People who've been invested, say, for the last 2 years, have seen a lot of profits, and it is natural for markets to be turbulent, to be volatile at times, and that is the price we all have to pay. The volatility is the price you have to pay. You have to endure to make bigger returns.
Right, ladies and gentlemen, we are now at almost 2:45, 2 minutes left. That will mark just 45 minutes of trade left in the market. It's not looking good. So 24,000 is now with the bears. Let us see how the next 10-15 minutes pan out, because then for the next half an hour beyond 3 p.m. you will have the same trend getting replicated. What is now in terms of a pain point hurting the Nifty? And I'll show you some very interesting data. What we'll do is we'll get into the Nifty and then look at the pain point in terms of selling pressure along with strong volumes, and that unfortunately is coming into Bharti Airtel. Despite a stunning set of numbers where first quarter profit actually doubled to 4,160 crores, Bharti is down 2%. Now this could be profit booking. Of course it is profit booking, because the counter was till very recently at a record high. Almost 69 lakh shares, 69.25 lakh shares have been traded, which is 140% of the 5-day average. You have a pain point in the form of SBI, 1.2% down. 801, and fairly decent volumes, 1 crore 37 lakh shares. You have HDFC Bank 1.2% lower, volume is fairly low. M&M 1.4% lower, earnings boy ONGC 1.3% lower, and of course Tata Motors. It rose up fairly sharply in the morning, but that turned out to be a dead cat bounce, now down 0.5%. So these are the pain points that are in the Nifty, and as we see now at day's low. So what is now at test, it is yesterday's low. The yesterday's low was somewhere like 23,925. Let us see whether that holds or not. Most likely it will be tested, and then we'll progress. This is, remember, the average volume weighted price which you've seen from 4th of June when the large candle was formed. So that sort of rests at 23,925. Let us see whether that holds or not. If it does, then it will be a little bit more of strength, but for the moment you see selling pressure accelerating. And what is in pain, as Abhishek had pointed out, defense. That's where the maximum money is coming out to be. Garden Reach Shipbuilders 5% down, limit down. Even Cochin Shipyard was 5% down. You have a sell-off happening on BEML, where earnings were not up to the mark, 6% lower. And of course you have stocks such as Zentech 4.5% lower. You have Masgaon 2.6% lower. These were the spaces where maximum amount of money was made. Within the railway space, you have Railtel down 2%, Ircon down 2%, IRFC down 1.3%. These are not numbers to be worried about, but this is where slowly but surely profit is being taken away from the table. Sakshi.
Sectors now coming into the fold of the bears now. The small cap 100 index has now slipped. Remember, it was up by 1.8% in the morning. That's come down, and it's now 0.1% lower in trade. The mid caps are down 0.3% lower in trade as well. Infrastructure, oil and gas have also slipped. Remember, realty was 3% higher in trade. It's shaved off half of its gains. 1.2% higher is it what is remaining within the gains. IT, metals, FMCG and pharma, just slight more gains that are coming in over here. Of course, on the Nifty, you have Britannia, JSW Steel, Tech Mahindra, LTI Mindtree. So some tech stocks, some FMCG stocks that are still holding up. But even in the PSU pack, large part of the stocks have actually slipped into the red, barring some stocks like, say, a Concor or an NTPC or an IRCTC. These are the ones that are remaining up into the green. But you know, the entire sector, what Shell also highlighted, this entire textile space that seems to be gaining ground on perhaps some benefit emerging out of the Bangladesh crisis for it. SP Apparels, Kitex Garments, KPR Mills, Lakshmi Cot Spin. We have Dollar Industries, Surya Lakshmi Cotton Mills, Ruby Mills, all of these stocks which are now rallying sharply in trade. Should one partake within this momentum at all? Abhishek, what do you think?
See, I mean, to look at the company individually, but I think there is going to be some amount of change or some amount of order flow redirected from Bangladesh. That is going to happen, but it's not going to happen overnight, because most of these large contracts have 3 months, 6 months, 1 year duration contracts. So it's not that suddenly the clients will stop taking from Bangladesh and come to India. Most of the large clients have multi-vendor approach. So obviously there would be some maybe emergency buying if things are temporarily there's some supply disruption within Bangladesh. So sentimentally, yeah, I mean, things could change for the benefit of India in the next few days. But I don't know whether it will be a sustained change. We need to wait and watch for that.
Okay, got it. But within the FMCG space, have you increased a lot of your focus of late? Do you think with the way the texture of the market is changing, one needs to hedge their positions with a lot of defensive names in their portfolio right now? Do you have that viewpoint?
See, I think the interesting part we are seeing is the sectors which are looking, good and looking strong, are the ones which are defensive. So whether it is pharma, whether it is FMCG, whether it is IT, these are traditionally defensive sectors, and which also sort of tells you that markets in their wisdom are maybe slightly apprehensive about what is going on in the world, right? So there is a flight towards relative safety. Within that, I think India defend the FMCG uh, pickup can actually help a lot of these larger FMCG players, because they've sort of not done anything. Demand has been sluggish for a while. So, I mean, yes, there is definitely a case for looking at FMCG, uh, especially FMCG focused on rural demand.
The money is going into pharma. Two all-time highs in this kind of a market. Torrent Pharma 3% higher. Granules we've discussed 650 now, about 1.5% higher. Now here is the most interesting part. When you look at top gainers, look at the percentage rise. 4% on Natco Pharma, 1360. This is consolidating at 52-week highs, almost record high. I'm fairly certain on the chart there. Let's look at some more stocks. Ipca Labs 2.7% higher. You have Cipla and Sun Pharma doing pretty well in terms of the weekly gains. Lupin has its earnings today, therefore 1.5% lower. And till very recently, you had a record high on Aurobindo Pharma as well. So absolutely, defensives are sort of where this profit booking and this money is going into. And let us see how this moves forward. The other thing I wanted to point out was how the PSU stack is faring up. Look at JK Bank, 2.1% higher, 113. Remember in the morning I had mentioned we track 85 PSUs for you. At that point of time, only 2 were in the red. Well, the tide has turned almost completely. Now about just 10-11 PSUs are in the green. And even those gains are not sort of worth mentioning. But one stock that stands out in terms of strength is NTPC, 416 rupees, still about 0.5% higher. And of course, within banks, you have Canara Bank, which is barely has its nose above water. And of course, you have a fertilizer stock, Fact plus Bharat Dynamics. Apart from that, there are losses all around, led by 3 defense companies. Cochin and Garden Reach down 5%, BEML down 6%, Dredging down 4.5%, Shipping Corporation down 4%, and the list goes on and on. So that's how, ladies and gentlemen, the profit booking is acting on the market. So far, the Nifty is now 23,977. Remember, yesterday's low was 925. Let us see whether that holds or not. But for the moment, the last 30-35 minutes of trade begin. Sakshi.
Okay. Let's also ask you on the IT pack. Mr. Basumallick can help us understand, within the IT space, post the earnings, how have your, funds deployment towards the IT space changed?
See, I think IT is one space which obviously has not done well fundamentally over the last 1 year. There's been a lot of talk of problems in terms of demand coming in. And I think that phase is now sort of getting over. The next 1 year is going to be much better than what we saw in the last one. Mm-hmm. So looking forward, I think IT looks much better. I think even hiring in IT companies have started. although it's sort of a bit slow, but it's definitely on the rise, and that's always a good indicator of how the Indian management, the IT company management, thinks about their prospects. The other part is, I think, if you are focused on mid cap IT, I think they might do actually slightly better than the frontline names. So mid cap IT services, mid cap ER&D is where I think would be good places to get.
Okay, so mid caps is where we can keep an eye out on within the IT pack right here. I also wanted to get a sense as far as the telecom space is concerned. We haven't spoken with you on that. With respect to the kind of moves that were coming in a few months ago, and now the tariff hikes that have already taken place, earnings have come in for Bharti Airtel. How are you really looking at the entire telecom story unfolding? Bharti Airtel, Jio, Vodafone, Indus Towers, Tejas Network, some such stocks, HFCL. How are you looking at such stocks?
So I think most of these, especially Reliance, Bharti, these are the two front runners in terms of being service providers. I don't think they have a lot of opportunity right now in terms of increasing their margins, increasing their ARPUs anymore. So already they've done a little bit. India is a very, very price sensitive market. So increasing it further from here is going to be tough. Indus Towers, again, is more a function of how Vodafone is able to sort of pay them back, how quickly, and then it sort of will do well or not so well, depending on that. The cable manufacturers, etc. Again, I mean, nothing specific. They're not related specifically to telecom. So overall, I don't think this is a space which will excite me a lot. These are typically the I mean, how should I put it? The regulated kind of entities where they'll find it very difficult to make disproportionate amounts of profits.